Assalamualaikum warahmatullahi wabarakatuh. Good morning, ladies and gentlemen. My name is Ernawati. I am a doctoral student of the Postgraduate School Management Study Program at Universitas Pendidikan Indonesia. I would like to learn upon my online presentation on the 6th Global Conference on Business, Management, and Entrepreneurship 2021. So, on the next part presentation. On my paper entitled Investor Sentiment and Market Reaction Before and During the Covid-19 Pandemic on Indonesian Stock Exchange. Background and purpose. In Indonesia, the spread of this virus began in March 2020 and has an impact on the Indonesian economy, but from trade, investment, and tourism factor. Coronavirus also has an impact on investment because people will be more careful when buying goods or investing. Coronavirus also affect market prediction. Efficiency market theory states that investors cannot use publicly available information such as historical stock price or trading volume to find action return on the stock market. However, finance conduct studies have provided empirical evidence that investor sentiment and their behavior can significantly affect asset return and create overpayment. Composite Stock Price Index or ISCG is a value to measure the performance of stock listed on the stock exchange. Investor sentiment is the view of opinion of investor anticipating the share price in the market. Investor sentiment will react positively if the market gives a positive sentiment and pays per share. Investor sentiment or market sentiment, which cannot be calculated, but there are indicators that support the emergence of such sentiment, supporting indicators such as the investor view of its cash flow, trading volume, and consumer confidence index that can affect investor sentiment. Trading volume is a number of stock trade daily, so the large trading volume provides that the stock is buying a lot. Positive and negative sentiment predict trading volume. The theory of consumer confidence index is a composition used to measure the ability and willingness of one individual to buy in the hope that there might be additional information to determine consumer behavior. Figure 1. So the development of ISCG stock price in Indonesia before the COVID-19 period and during the COVID-19 period, namely from November 2018 to April 2021. Figure 1 shows that ISCG share price initially fluctuated steadily, then in March 2020, ISCG moved drastically to the low point. The purpose of this study is to analyze and probe the influence of investor sentiment on the Indonesia Stock Exchange. Before and during the COVID-19 pandemic, the research looked at how investors view stock price movement before and during the COVID-19 pandemic. Methods. This study used a quantitative approach. The subject of this study were the Indonesia Stock Exchange and Bank Indonesia. The dependent variable used in the study is the Composite Stock Price Index or IHCG closing price each month before and during the COVID-19 pandemic period of November 2018 to April 2021. The independent variable used in the study is the trading volume, which is the monthly average volume for the period November 2018 January 2020. Monthly historical data of Consumer Confidence Index from November 2018 to April 2021. The sample method used is non-probability sampling using purposive sampling technique with the number of 30 observation sample based on the 2018 until 2021 study in the monthly. The analysis technique used in this study are multiple linear regression with two equations, namely before the COVID-19 pandemic in 2019 and during the COVID-19 period in 2020. Results and discussion. Descriptive analysis is present with two tables, namely description analysis before the COVID-19 period and description analysis during the COVID-19 pandemic. The impulse of investor sentiment is the market reaction before and during the COVID-19 pandemic. The results of this study show before the COVID-19 period, investor sentiment produced by trading volume and swimmer confidence had not influence on the market reaction project by the IHCG Composite Stock Price Index. Before the pandemic, the stable state situation did not trigger to make a lot of investment because of the stable return of return. This research is the accordance with a current research suggesting that the impact of investor sentiment on market reaction is temporary. So it could be that sentiment doesn't affect stock price change unless extreme investor sentiment can trigger a market reaction. On the contrary, the result of research during the COVID-19 pandemic, investor sentiment had a significant effect on the market reaction. During the pandemic, the stock price was at a low point and consumer confidence declined flat below 100, which meant that pessimistic investor confidence. It turned out that low stock prices are able to trigger investor the impulse in the hope of higher return after the pandemic, thus affecting the market reaction. The results of this study agree with Baker and Wegler. At a time when investors are optimistic, they will buy stock that are rising, while when investors are pessimistic, they buy stock that are falling. The effect of trading volume on the composite stock price index before and during the COVID-19 pandemic. Partly, the results of this study states that before the COVID-19 period of volume trading had no effect on the composite stock price index or IHCG. The results of this study were reinforced by Chen, which suggests that trading volume does not always have a significant relationship with stock return due to fundamental factors that further influence market reaction. In contrast to the result of the research during the COVID-19 pandemic, that volume trading has a direct and significant influence on ISCG. So, the higher and trading volume, the higher the ISCG trading volume exert a dominant influence. The effect of consumer confidence on the composite stock price index before and during the COVID-19 pandemic. The result of this study show that before and during the COVID-19 pandemic, consumer confidence did not have a significant influence on ISCG. Consumer confidence decreased before and during the COVID-19 pandemic, which is below the number 100, so consumer confidence has no influence on the market reaction. Chen said about the level of consumer confidence that describes how consumer confidence in the economic situation and their income ability. These two factors can affect people's economic decisions such as saving, investing, or shopping activities. The results of Pengaruh, Sebelum, and Javelska research also state that the relationship between consumer confidence and share price is counterintuitive. Conclusion. The conclusion of the research is that before the COVID-19 period, investor sentiment, namely trading volume and consumer confidence, had no influence on the market reaction produced by on ISCG. On the contrary, during the COVID-19 pandemic, investor sentiment had a significant effect on the market reaction. Partially before the COVID period, trading volume had no effect on ISCG. On the contrary, during the pandemic COVID-19, trading volume has a positive and significant influence on ISCG per month at the close. Partially before and during the pandemic COVID-19, consumer confidence did not have a significant influence on ISCG. Consumer confidence also decreased during the COVID-19 pandemic, so it no effect on the market reaction. The end slide. Thank you.